Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and a principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the small business community. Okay, so I want to talk about audit rates. The IRS released an article yesterday, day before yesterday, talking about the audit rates. And taxes, of course, is a big topic every year. But when we're talking in an election year, taxes is like, whew, we saw it in the last election, and here we are again in this election. You get the headlines, of course. You hear about Jeff Bezos not paying federal taxes. You hear about President Trump only paying $750 in federal taxes. And then you also have articles that there was an article out that shows a map of the most audited zip codes. One of those was in Mississippi. Well, Mississippi is one of the poorest states in the nation, if not the poorest state in the nation. And then you got the big headlines about wealthy people who are getting hemmed up for tax evasion. And when those stories hit, it then seems to feed into that theory that wealthy people are tax cheats, and that the tax system is unfair and it's weaponized against poor people. And so that's a hard place for the IRS to be in, especially when really they're just looking at numbers, right? And then when I share videos like this, and some of my colleagues also share videos like this, y'all come for us like with fangs out, because we're trying to share with you the actual data, the actual facts. And because it may not be what you want to hear, then suddenly we don't know what we're talking about, and we're one of them, whoever them is, all of that stuff. So but I'm still going to share this anyway, because this is kind of stuff you need to know. So the IRS shared this article talking about the IRS audit rates. And I want to share with you some things verbatim, but then, we'll talk about it. Okay. So the title of the article is IRS audit rates significantly increase as income rises. Okay. And what it says is tax audits are critical compliance tool to help ensure the fairness in the tax system. I know people are going to start laughing right there. And the IRS works hard to ensure the agency's audit selection process is fair and impartial. Decisions to conduct audits are based on the financial information that's on or not on the tax return. There's an extensive set of checks and balances to ensure fairness with individual audits, and there are important protections and appeals for taxpayers during the administrative process as well. Okay. So there's some more stuff in there, but then it goes on to share how higher income taxpayers face a greater chance of audit. Now, when we're talking about data is all the numbers. The people, average person does this. That if you're really looking hard enough, you will find data to support whatever it is that you want to say. Okay. This kind of puts me in the mind of the whole welfare fight, where people like, oh, there are more black people on welfare, there are more white people on welfare. But you can find numbers to support both of those arguments, right? So this is why you have to be careful with headlines, as well as, just the language that's used, and you have to go and really look at the data yourself. So the article goes on to say that higher income tax returns are more complex, and they take much more time to complete and audit, right? Where it says low to moderate income tax returns take less time to resolve. Each year, approximately 25 million lower income taxpayers seek the refundable earned income tax credit. And we know it, right? Which on their returns involves a single issue that can be quickly resolved, sometimes within a month or so of filing their return. The IRS prioritizes a prompt review of these returns in order to quickly issue the earned income tax credit refund without any further audit of such returns. The average time to complete an EITC audit is 5 hours per return, where higher income tax return audits take a lot longer, okay? And you're saying, okay, well, how is this possible? when it comes down to auditing an earned income tax credit return, it's generally very simple and can be done with automation. You may have a W-2, you've got some dependents, okay? That's what is all on an earned income tax credit return, generally speaking, okay? So the IRS has automated reporting. So you get your W-2 and the IRS gets a copy and they're waiting for those W-2s to match. Okay. So, and just like with those social security numbers, right? You got a social security number for Jack and Jill on your tax return. And did Jack and Jill wind up on someone else's tax return? Jack and Jill is on yet someone else's tax return. There might be something going on there, right? So all of these computer systems are talking to each other and make that a lot easier because it can be done by computer, where more complex returns take actual human intervention, okay? So let's talk about the numbers. It says the IRS averages approximately 300,000 EITC audits per year out of about 25 million. Now, this is where it starts to get interesting. So it says for 2015, which is the latest data that they have, right? So they don't have the information for 2016 and later, because those returns may not be completed in the auditing process, or they have not started the auditing process yet. The IRS has 3 years from the time a return is due. So if you have, so like, let's take your 2020 tax return. The 2020 tax return under a normal circumstance is due April 15th, 2021. If you file an extension, October 15th, 2021. Well, the IRS has until 2024, October 15th, 2024, to audit that return. Okay. So it's based on when the return is due. I want to make sure you understand that. So 2015, in the income categories of 1 to 5 million, 5 to 10 million, and 10 million and over, the total tax returns for those was 478,772 returns. Okay. Out of that 478,000, 13,000 of those returns were audited for a total of 14.94%. Now, for everybody else under $1 million, there's 150,014,492 returns submitted. Ooh, can't I read a number, y'all? Okay. And out of that 150,837,835 were audited for 8.7%. Okay. So percentage-wise, higher income earners have a higher chance of getting audited. But when you're looking at sheer numbers, and this is where people tend to look, is at the sheer numbers of people getting audited, right? So if you look at it, there's that between 1 million and over, right? There's 478,000 returns submitted in 2015. During that same time, twice the number was audited in the under $1 million category, because there's a lot fewer people in the higher income categories, right? So more people, more audits. So yeah, you can look at the data and you have an argument that says, poor people get audited more than rich people, because in sheer numbers, yes. Okay. But then you can also look at the data and say rich people get audited more than poor people, because when you look at the data percentage wise, yes, they get audited more. So it just really depends on the numbers that you're looking at. And it's important to know this because, again, when you get these headlines that talk about the IRS is targeting poor people because, here's the data that supports that, you have to know the whole story. Okay. And because there's a lot more to it than that. It also says in this article that typical audits for higher income taxpayers involve at least 3 different tax years, often including related entities, and routinely take years to resolve. They also require highly trained, experienced IRS agents and teams utilizing the most sophisticated tools and techniques. You know what that means? money. And so when the IRS's budget was cut, they had to look at where they're going to put those assets. So there are more people on the higher income side, and there's more machinery on the lower income side. Okay, so so it also says in here that people want to ask, well, should the IRS simply audit fewer lower income taxpayers receiving their earned income tax credit? And here's what they said is the challenge. The error rates on tax returns for the earned income tax credit is around 50%. And the improper payment involving the earned income tax credit claims is more than $17 billion each year. Now, we don't want to lose $17. Now, we're talking about $17 billion. And how does this happen? I'm so glad you asked, right? Because you have fraudulent tax preparers who will doctor up somebody's return so that they get the earned income tax credit. There are people who claim false dependents, right? Are there genuine errors? Yes, there are. However, there is so much training that tax preparers have to go through. If you actually do the training, you know what is required of you. And as a matter of fact, the fines for per error for tax preparers who make these errors is like 500 and something per error, and it's going up, by the way. Okay, so that means that $500 for every error. And if there's 2 or 3 errors on that return for the earned income tax credit, you're getting fined $500 for each one. And then for the taxpayer side, when those things are caught, you're going to have to pay that money back. So when you've got someone who calls themselves a tax professional who is claiming false income, like false business losses and all of that to increase your refund, that's theft. And people feel entitled to a tax refund, and it's not an entitlement. It is not an entitlement. Just because your neighbor got $8,000 doesn't mean you're entitled to get $8,000. Everybody's tax situation is different. So, I'm sharing this with you because, especially in an election year and going into 2021, there's going to be a whole lot going on. There are going to be some people who are going to wind up with tax bills that aren't expecting them and aren't prepared to pay for them. Okay. There's going to be a whole gamut of things that are, that the way the taxes are going to go next year, that, it's anybody's guess how that's going to go for the individual. But the thing about it is, and what you have to realize is that the IRS is not out to get poor people. The IRS is not weaponized against poor people. It's just easier to catch fraud because it's all automated. Where wealthier people, it takes time. And people are still stuck on Donald Trump. And yeah, his tax returns are being audited. Yeah, his tax returns can take years to be audited. Why? Because it requires a person, requires people, it requires money. And it's him and every other wealthy person that's getting audited. It takes a person. It takes, people, skilled people. Skilled people cost. And when those funds are exhausted, guess what? They're stuck, right? So, I shared this article with you to really give you some perspective on how the IRS operates and how these audits happen, right? There's way more. There are so many computers involved. That letter that you get, a person didn't send that letter. It was a machine that has been programmed to spot things that sends you that letter, and a person is not involved until you respond or don't respond. It's that simple. Okay, so I really hope that gives you something to chew on. I'll add the link to the article, so if you'd like to go back and read it, you absolutely can. And I'll see if I can find the others as well. I just thought about that. All right. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will